talking to them, they were like, we were just told all the time that we wouldn't be able to do it. And you've just said that if we go and do these things that we can buy a house. Whatever situation you're in, there'll be a product for you. It's not true at all. Like, you don't need 20%.
The misconceptions and myths around lending and getting your first home loan are often a big enough deterrent for people to give up before they even try getting into the property market. So today we're going to put that to rest and hopefully inspire you to reach out to a mortgage broker and buy yourself a property. My name's Tristan Larkin and I'm here with James Rankin, and you are watching Buy Property Now. If you haven't subscribed, hit that subscribe button as we post multiple videos every week and are the #1 source of information for first home buyers. So while saving your deposit, there are 3 myths in particular that may be holding you back from speaking to a broker. The first is you always hear that you need to have good credit score to be able to buy a property. Second is if you run a business, having 2 years of financials. And the third is healthy spending habits, maybe making sure that you're not eating the avo on toast every single Sunday for brunch. So James, what are your thoughts on these and how much do they actually impact your ability of getting a loan?
Yeah, it's so true. The media and I don't know how all of this information gets out there as to when you or why you can't buy a property. But yeah, these are definitely some of the myths that stop people, as you said, going and taking action and talking to a finance partner, talking to a broker to understand where they're at. In my experience, talking to a broker at whatever stage is better than not talking to someone, because you'll just walk around aimlessly. It's like, yeah, running around like a headless chook in terms of you're doing this, you're doing that, and you'll put your head in the sand. You'll spend more money on a holiday that you could have gone to saving a deposit, because yeah, it's all those little bits and pieces that you wouldn't have clarity on if you didn't go and speak to someone. So that's why these myths sort of come up and stop people going and taking that action. But yeah, what I'll say to those myths is they're pretty much like all of them, there's a solution for you. Go and talk to a broker because they have way more options these days. There's so many banks out there. There's, it's not just the big 4, the big 5. There are lots of little banks out there that will look at whatever situation you're in and there'll be a product for you. The banks sell products, right? Like their mortgages and their loans are products. So they create all of these different ones. They have different policies and they have different interest rates attached to them. So yes, if you've got bad credit, yes, if you've only been running a business for 6 months, but you can prove a steady history of income, you might have to pay a high rate, but it'll let you get into property. So yeah, it is a common misconception that you can't buy property if you tick one of these boxes, but it's not true. So most people will get hung up on the serviceability side of things and the deposit amount. So yeah, we'll sort of run through the deposit factor, but serviceability is one that you can't really avoid because that's how much you earn. So how much you earn is how much you can borrow, pretty much.
Yeah, right. So the next biggest misconception is that it's often heard that you need to have a 20% deposit. And I know that there's been a few reports that have come out recently that have said that first home buyers in Australia take, on average, mind you, 11 and a half years to save their first deposit. I don't know if I believe that is true. I believe that would be true if you were trying to achieve the 20% deposit amount. Though, is it actually realistic to aim to have a 20% deposit amount when purchasing your first property?
Yeah, I first heard these deposit numbers over 10 years ago, and it was about 10 years that it took you to save a deposit in Australia. And I think that's nuts. Like, if people hear that, and it's so unfortunate, like we do come across people that are in this position. I was talking to a couple maybe a month ago, and I said to them multiple times, like, let's just jump on a call. Let's just jump on a call, because I would rather give you 15 minutes of my time to give you some clarity around what you need to do. And talking to them, they were like, we were just told all the time that we wouldn't be able to do it. And you've just said that if we go and do these things that we can buy a house. And I was like, yeah, go and talk to the mortgage broker. And they did. And then they came back and they're like, we're probably 6 months away from being able to buy a house. And I was like, there you go. That's exactly why you can't listen to all this crap out there, because you need to just assess your own position. And unfortunately, the people that are out there And the way that the media does it, it's sort of like a one size fits all. They're blanketing the whole of the first home buyer market. And that's what really annoys me, is that it's not a one size fits all. Everyone's individual. There are heaps of different options out there for you. So just start the conversation with someone that is willing to help you and uncover what you might be able to achieve. So the 20% misconception is 100% true. It's not true at all. Like, you don't need 20%. I think it's as low, and we're not mortgage brokers, by the way. This is not financial advice. Always seek your professional opinion. Or yeah, someone, what do they say? Seek a professional opinion. And
Like that.
yeah, so I think it's like 8%. I think you need 8%, somewhere around there. You're going to pay LMI, lender's mortgage insurance, but that doesn't matter. Again, in that first home bracket, when I first started looking at property, the first home bracket was 350. Now it's 650, right? That's where the first home bracket sits. And it's probably even a little bit more. Like, if I looked at a 4-bedroom house in the burbs, they're more like 700, 750. So
Easy.
that's definitely, like, that's tracked up continuously. So no matter what all we're going through, those house prices don't change too much, just because that's the majority of the market. When we're looking at it as a triangle, top end of the market fluctuates a lot. Bottom end of the market is very stable because of the buyer pool. Like, it just stays very, very stable. It doesn't go up as quickly as some parts in the top, but it definitely doesn't crash like the top does as well. So that's just something to be aware of, and allowing or using LMI, lender's mortgage insurance, as a tool to get you into your first property is okay. I used it myself.
So just for those that don't know, what actually is lenders in mortgage insurance? Like, people hear the term LMI often.
Yeah, it's insurance the bank takes out against you. So if you miss a payment, if you default, the bank has insurance to go back on and claim any losses. So yeah, it's not to protect you at all. It's to protect the bank.
Not to protect you as the purchaser. You have to pay it as the purchaser, but it's not to protect you. It actually protects the bank.
Yep, exactly right.
Yeah, it's an important clarification. And you will generally have to pay lender's mortgage insurance when you're taking a loan out for over 80% more so of the purchase price of the property.
Yeah, and a note to that is, there's so many industries now that will allow a 10% deposit and no LMI. And there's lenders out there as well that offer different LMI amounts and all of this kind of stuff for different industries. But nurses, accountants, lawyers, any of those types of industries, they are generally eligible for some sort of LMI, like difference, or a deposit amount that is different to the majority.
So again, it sort of sounds like every single person's circumstances is different, and that is why it's so important to make sure that you go and speak to a mortgage broker, because you may never have heard that you're a nurse, and then it turns out you don't need to pay LMI because they will sort of, specific banks will lend you higher amounts. It's massive difference.
Yeah, absolutely. So it is back to that fact of one size fits all is not relevant when you're buying property. Your situation, your particular case is just different to every single one. Every single person buying property is going to have a different scenario.